Hey guys. All content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. This week is going to be very unique and crucial moving forward. Markets began showing a lot of weakness this past week after the Federal Reserve minutes suggested the central bank is going to be approaching inflation a lot more hawkish than previously suggested. This is something we had talked about as being the only way the Fed could actually try to get control. But then they announced a very passive approach and now they've gone back on that word, indicating a very aggressive stance to combat inflation levels. We were right in the beginning with my theory as to how things would have to pan out, which means a lot of our theories as to what happens next still stand strong. For a moment, when the Fed gave the impression of a quarter-point interest rate raise, it meant I would have had to reevaluate my stances and the way I thought about the market, but given the Fed did a 180 turnaround, this means we are back on track. So, what do I think happens next? Well, the consumer inflation rates are going to be released to the public on April 12th, this Tuesday. This will be the biggest factor dictating where everything moves. Now, given that the war in Ukraine began in March and the energy sector exploded, you can 100% bet on worsening inflation. Analysts and economists are all speculating just how high this is going to be. Some experts suggest inflation could even top 10%. If that is the case, I don't think you need to hear it from me that the stock market is going to have a serious drop. Consumer inflation expectations will come out on Monday, so we will have a general idea of what the market sentiment is, but I can already guarantee you is not good, and if the inflation report is somehow even worse than those poor expectations, get ready for all stocks to sink. Now, let me just give you a general idea of what the calendar this year has. We have the Consumer Price Index expectations coming on Monday and then the actual report out on Tuesday. We will also get the Economic Optimism Index as well. On Wednesday, we will get the Producer Price Index report on headline inflation rate and core inflation rate. We will also have the earning reports from BlackRock, JP Morgan Chase, Delta Airlines, First Republic Bank and more importantly, on Bed Bath & Beyond. On Thursday, we have retail sales data for the month of March. We will have the initial jobless claims along with notable earning reports from banks like Goldman Sachs, Wells Fargo, Citigroup, Morgan Stanley and many others. Lastly, we will have the data for industrial production, manufacturing production and capacity utilization rates for the month of March this Friday. As you can see, this will be an incredibly significant week. We already expect really bad reports, of that there is no doubt. What is at stake is the possibility that the market somehow worsens even with such poor outlook. Now that we have a clear understanding of the outlook for this week, I want to actually take a moment and review some things. For weeks, we have been watching the market rally, with major benchmarks running up showing signs of strength as if somehow economic data gave any clue that things are improving. This irrational behavior has left investors spooked and pondering what is exactly causing markets to rally. Obviously, there is never one single simple answer that addresses so many factors in the market, but the more notable ones we have done well to talk about. First, every time there is a huge market dip like the one we saw a month ago is followed by a rally. Investors quickly begin buying the dip even if the news aren't good because of the expectation that things will improve over time. Because this, throughout history, has been the reflective response by the market, algorithms, which make up for the majority of trades, have been buying in anticipation of this psychological human phenomenon. Another big reason is because many believe themselves to have correctly priced out the war and inflation and as such are taking opportunity to buy quickly because they think the markets cannot sink any lower. They used data that suggested stocks have much more room to run before dipping and they believe in what Jerome Powell said about a strong economy. Now, we have talked a lot about Treasury yields these past couple of weeks, and though the shorter-term yields have begun passing the 10-year yields, for the most part, the real yields remain negative, at least for now, so that combined with the strong economic sentiment by Jerome Powell makes investors think that this was just a retracement soon to be followed by the biggest bull rally ever. These are all fine reasons why bull investors have been buying and rallied up the stocks, but guess what, I am not biting. In fact, this rally that we have seen has had a profound effect on my outlook on the economy. The way stocks have performed, with big bull runs, have compounded in me that we are indeed in a market bubble. You see, even if all these reasons were correct, the rate by which the market reacted and acted as if everything is bullish with huge runs up shows me just how unstable this is. Volume from investors have been significantly dropping as well, and though we have seen data from the past suggest that bull rallies start with decreased investor volume, I think the current fundamentals of the economy do not warrant reasonable cause to believe we are going to see the same pattern play out. Statements by the Fed weren't just bad, they indicated and showed that they have little to no room to experiment what works to fight inflation. It seems being very aggressive with interest rates as their last stand and being too hawkish will lead us into a recession. The bull reasons, though acceptable as they are, and I do respect proponents of different opposing thinkers, still remain weak in my opinion. Their sentiment all stands on the expectation that things will somehow magically fix themselves, that the fundamentals have no room other than to improve from here on out, and I simply just don't believe that because objective speaking, fundamentals are still strong. They are weakened, but they are strong, which means that we are nowhere near as bad as we can and most likely get. My short and medium outlook on the economy is bearish and remains bearish and will remain bearish for the whole year out. Wall Street is about to unleash the next awakening on the economy, and this is going to be ugly. My biggest evidence on this lies on how Wall Street operates, which we talked about this past week in a morning video. Wall Street demands maximum profits at all times by whatever means necessary. If you run a public company thinking about the long-term future, Wall Street will single you out and bury you, which is what happened with GameStop and AMC. They demand better profits each quarter and force companies to shift labor to cheaper companies, and to especially outsource. If profits are down on a particular time period, Wall Street pressures companies into firing their employees for a while and ride on that negative press for a bit until they can begin rehiring employees at a cheaper price. They force companies to act very short-term focused, and this has the effect that in the long term, economists begin to experience recessions, and that is where we are at. These fundamental issues, now compounded by the ugly effects of inflation and war uncertainty in Ukraine, along with a bull run that makes no sense and barely even has investors buying, give the best reason to believe that we are indeed living in the biggest bubble of our time. When will the bubble burst? I cannot tell you. In fact, I cannot even begin to hint or predict. There are so many things happening right now all at once that determining a correct point in time when everything crashes down is impossible, but I will tell you one thing. My resolve in GameStop and AMC and other meme stocks is the only thing that strengthens. And this is where I sort of what I want to address as the last segment of the video. Last week, things were ugly for GameStop and AMC, but even more ugly than the daily price of these two was the reaction by the online community of investors. You could tell something was very off. The reason for this was because a bunch of clickbaiting YouTubers thought themselves to be smarter than they are and began pumping GME and AMC as getting ready for a leg up. They were collectively convincing thousands of investors that we were bound to leg up and move to new highs due to some half-assed technical analysis and crossing averages. I even saw people on my Twitter feed telling others that they deciphered the Citadel algorithm. That's right, people really think that after spending a couple minutes on TradingView watching the charts and looking for patterns, they somehow broke an algorithm that has probably been built and worked on for decades now by quite literally some of the most brilliant minds in the entire world. As you might imagine, this self-centered narcissism has the effect of creating euphoria and bad expectations that were nowhere near grounded in reality, and as a result, people were devastated on Friday. Why do I say and bring all of this up again, you might ask? Well, because this week these same people are going to be talking about another leg up. Some might get humbled a bit and lower their tone, which means they will begin retracing some of the ambitions they imposed on GME and AMC charts and begin talking about finding support to consolidate before retesting the highs we tested a couple weeks ago. I want to tell you something right now. With the way the entire market is shaping up to be, do not listen to anyone. The only thing I can tell you right now is that technical analysis won't be doing absolute shit this week because the events that we discussed are taking place are too big. They can create such volatility that no support or resistance will hold true. Stay strong, but more importantly, stay zen. I do not know which path this will take us, but I do know the end result, because shorters are trapped regardless of what happens if we continue to hold, and hold I will until I get my money or die. And that is all I have to leave you guys with. I hope this video proved to be helpful in any way, but I will never know unless you tell me, so go to the comments and let me know. Also, let me go ahead and pump the biggest asset in the world, my Discord. Over the weekend I restructured a lot of the Discord, erasing pretty much every channel and remaking it again and adding a lot of much needed information and tutorials and explanations. It is a much more welcoming, better built and more functional Discord than it has ever been before. I set a strong foundation for continued growth. Today we passed 5,600 members, which is absolutely stunning. If you haven't yet, come over and join it already. This is going to be a crucial week and things can get really ugly, and the last thing I want for any of you is to be alone with no serious investors pumping things and getting you frustrated. Come to a place that is zen with thousands of investors holding calm, collectively, and having fun. I wish you a great weekend. Thank you for being part of this little channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.